at a time. It is Tuesday, I think. Yeah, Tuesday, December 21st, and this is your daily financial news. If you don't know already, this is a daily show we have been doing together for over 1,000 days. Real quick question from you. I would love to get some audience participation right from the start. Let me know if you are a daily viewer, just type in daily, or if you are new to the channel, just type in new. I would love to see who my daily viewers are out there, as well as all the new members. We are growing. The daily financial news is the video that gets about 12 to 1,500 views a day. So I want to thank you very much. I am so happy to kind of review what I do in the morning and share it with you. Before we get started with the daily financial news, we must congratulate people who have done the work and got deals. What we got here is Keith, congratulations, and Mike, congratulations. Your cards, gentlemen, will go out in the mail. If you don't know what this is, folks, what I'm doing on my channel, one rental at a time, is I am spending money trying to identify and try to separate players and spectators. I have now come to appreciate that most YouTube channels out there in the real estate and investing game are geared to spectators. They want you to sit on the sidelines. They want you to be scared. They want you to do nothing. One rental at a time. The daily financial news, the 8 or 9 millionaires that we bring you every week, all of us want you to do the work. Want you to do the work. We know it's hard. We know it's difficult. But if you are doing the work, you are a player. And that is what this channel is all about. It used to drive me crazy that fear and crisis and all of those words got clicks. But now I get it, and I am okay with it. This channel is not for spectators. We are going to hold you accountable. We are going to ask for daily disciplines. And lots of people don't like work, so that's okay. On to the daily financial news. I read an article. Actually, is it called an article? It's called a paper. A paper produced by the University of California. The paper basically identified that San Francisco is, new arrivals fell 45%. This is the second year in a row, but 45% is quite a fall. And this is what I'm talking about, the Bay Area. Not only did 45% fall, but they also saw a jump in 21% of folks leaving. Now, I've talked about this a couple of times in the last week, but here is the deal. A lot of people have been geared to hear numbers like that and think crash. This is going to be a very slow moving train. This is the second year in a row of San Francisco, the Bay Area, and frankly, California losing population. More importantly, not only losing population, as I've said repeatedly, we are not the destination place for new college graduates. We have lost that. And it is that loss that will be like termites in the foundation in 5 to 10 years. If we cannot reverse this, if we don't once again become the destination for college graduates, engineers, computer science, all of that, we will lose. The Silicon Valley will lose its shine, and our $1.5 million average home will fall. Our highest taxes will be a problem. Our 169% cost of living. Is it no wonder people are going to Austin, Texas, Nashville, Tennessee, Boise, Idaho? Gavin Newsom, this is on you. You have created this environment that has made California anti-business, anti-lots of things. So it won't happen overnight. California's got a lot of people. It'll take time, but it will certainly happen if it is not reversed. Single-family rentals across the country. Again, if you've been watching my channel for any length of time, I told you this was coming. Historically speaking, values run first, rents run second. What we are seeing now is rents are catching up. Values are going to slow down. The great real estate slowdown is happening. I see it in my market. I see it across the country with all of my students. But rents are up 11%. Not only are rents up 11%, folks, but vacancies 25-year low. Now, these are national numbers. Real estate is hyper local, so learn your market. But as somebody who talks about real estate, I do my best to share national information. So, double digit rent increase, record low vacancies. And oh, by the way, if you've been doing what I've been talking about and locking in 30-year money, you are doing pretty well, right? That's pretty cool. So today the stock market is bouncing a little bit. Is Santa back and is the pain over, to go with a Saturday discussion? Or are we just witnessing dead cat bounce? We have had 3 down days. Maybe the market is due for an up day. Again, no skin in the game. Always just curious what you all are thinking. Is the Santa Claus rally started? Type in Santa. Or is this just a bounce? Type in bounce. I'd love to see what you guys are thinking. Over the weekend, you all were right. We were about 70-30 pain versus Santa. So let me know what you think today. Is this bounce or is Santa back in force? So just love to hear what you're thinking. Let me know below. Nike earnings came out yesterday, and they were on the surface, they were outstanding. They were great. Beat earnings, beat revenue, crushed it. There are 2 things that I have been talking about that I think Nike is perfect for. 1, China. The Chinese consumer, the Chinese expectations missed. The Chinese sales missed by 13%. Hundreds of millions of dollars miss. Now, there are 2 things that could explain this, and I am by no means a China expert. I am watching from afar. 1, perhaps Nike has done something to upset the local consumers, and we have switching costs. Maybe they're buying Reebok instead of Nike, or I don't know, whatever the other shoemakers are. That is possible. I think I would have heard about that, given as much as I read, but it is possible. The second thing, and much, much, much more concerning, and what I expect, is once again, the Chinese consumer is retreating. When you get shocked, when you get scared, you don't buy new kicks. You save, save, save. We had our first hint of this 6 weeks ago, 8 weeks ago with Starbucks. Now we get it again with Nike. And I told you on Monday what would happen yesterday. The Chinese government lowered interest rates, or lowered interest rates. I think the Chinese economy is in deep short-term doo-doo. So something to watch. Again, maybe it's switching. Maybe they're buying other brands, and we'll see blowout numbers from other ones. But I don't think so. The other thing, Nike, North America, U.S., blew it out of the water. Again, I am thinking this could be a head fake. What did I tell you earlier in the year, earlier this month? I believe the American consumer, the U.S. consumer, is sitting on record savings. We have been told ad nauseum to expect shortages. So what do I think happened? I think people shopped early. I think people spent early. So of course, these numbers are going to look good. Can Nike repeat in Q1 and Q2? I think we are going into a recession, and I am not sure the consumer will spend as freely in Q1, Q2. But we shall see. But right now, Nike is a perfect setup. The American consumer is spending, as I expected. The Chinese consumer is not, as I expected. Very interesting stuff. Don't know if you heard this, but it looks like President Biden is going to announce that they are deploying military personnel, doctors, nurses, those types, to regional or local hospitals in January and February to help with what they expect to be wave of infections, or I don't know, people visiting because of this unfortunate virus. In addition to that, he'll be announcing you can order a take-home or at-home test. I believe he's bought 500 million, or we have bought 500 million. I was going to say copies. I don't know what they're called. Tests, maybe. that you can supposedly order online in January and get one at home if you would like. So again, Biden is talking about this. I believe it's today, Tuesday. I don't know what time. I didn't look. But it'll be interesting to see what he has to say. General Mills earnings came out as well as Nike. They hit the top line but missed bottom. General Mills, again, is one of these companies that's kind of a, you order a lot of when you're afraid, you just store up in your cupboards. But again, they are talking about higher and higher and higher input costs, shipping costs, hence the miss to the bottom line. Rite Aid came out. They missed the quarter, but they also are closing 63 stores. Rite Aid is closing 63 stores that estimate that they will save them $25 million. That sounds like a lot of unprofitable stores to me. Looks like the Turkish lira, we've talked about it a couple of times as their president has lowered rates in a high inflation environment. Want to give him a shout out. He announced a plan or a goal to protect the savings of the citizens. If you have savings in the Turkish lira, the president announced that they would make up any shortfall in your savings if inflation exceeds the interest rate. I think that is a wonderful and ambitious goal. You've got to try to establish faith in your currency. I wasn't able to figure out how he's going to pay for that. As you may or may not know, government's source of revenue is taxes. So who is he going to tax if inflation exceeds the interest rates? Where's the money going to come from? Is he going to tax or is he going to print? I would say printing kind of exacerbates the problem. Tax, I guess, could work. Maybe I don't know. It's interesting. But again, I've talked about the lira plunging. It's down 40% for the year. I thought I would give him a little shout out because he did give a little injection of good news, hopefully for the Turkish citizens. The question for me is not Q4, the quarter we are in. It's going to be a barn burner a la Nike. But what is going on with Q1 and Q2? Have we sapped consumer confidence? Are we going to have a slower GDP? Are we going to have a negative GDP? I believe the GDP is already negative. We're going to have Q1 of 2% growth and then 6% inflation, which is really -4. But could we really have a negative print? It will be interesting. Blackstone's going shopping, folks. Blackstone's buying a 899 unit building in Manhattan. I don't know if you know this, but there's sometimes people price buildings like cost per door. Like I bought a building, 50K a door, 40K a door, 100K a door. You hear that a lot. Well, Blackstone is spending over $1 million a door. Woo! 899 units, $930 million. I'm sure it's happened before, but I don't recall somebody spending $1 million per door. Wow. That's amazing. But yep, Blackstone's going shopping. Don't know if you know this, but it looks like Saturday before Christmas, which we just finished, was actually down 26% year on year. If you don't know, this last Saturday before Christmas is the second busiest retail shopping day. This is in-store shopping visits, shopping mall. It was down 26% from 2019. Again, I would tell you to expect that. Why? Because we have been told again and again and again to expect shortfalls, and hence we shopped early. It should be noted that we were still up 19% from last year. Again, folks, I think Q4 is going to be awesome. I'm really nervous about Q1. You know what? That's what I guess one more topic for today. This one's going a little long. I apologize. Looks like home flipping was identified in a magazine or an article I was reading. 95,000 homes were flipped in Q3. A flip is considered buy and sell within a year. It looks like flipping is getting riskier, holding times longer, cost of repairs going up. It is getting harder and harder to flip. I totally agree. That's why I will be buying and holding going forward and be using bonus depreciation to get year one discounts or year one tax returns. All right, folks, have a wonderful day. And last thing, shout out to all my students in my course, How to Get Started One Rental at a Time. You all completed 1,252 lectures yesterday. Thumbs up. We got a lot of students signing up before the course goes up, which is amazing. A lot of people are jumping in. We normally do about 900 courses sessions a day. So yeah, just yesterday, 1,250. A lot of new students joining before the price goes up. If you are one of those new students that bought, don't forget you have access to a private Facebook group for free. It is a group, not a page. So make sure you ask to join the Facebook group, How to Get Started. Or no, I'm sorry. The Facebook group is One Rental at a Time Works. Have a wonderful day, everyone. Take care. Bye-bye.